Now, the Kenyan economy is facing its toughest credit worthiness test in years. This is according to the Institute of Public Finance. According to the report, by mid-2025, growth optimism had dimmed while fiscal reforms were faltering, even as investor confidence continued to slip away, leaving the country at a crossroads. The report further reveals damning misuse of Article 223, where the government in the first 9 months of the 2024-2025 financial year spent 11.9 billion shillings, out of which 6.7 billion was spent without authorization. Jimmy Mbogo has more.
While Kenya has continued to outpace the region in average growth rate, the optimism that once defined the outlook has given way to caution. According to an IPF report, this has been occasioned by a widening fiscal credit gap. The country's debt load, which has also climbed to 64% of GDP, surpassing the 55% threshold deemed sustainable, has also made investors jittery about the country's long-term trajectory. Experts say the increased cost of credit, which is consuming a growing share of revenue, and the government's over-reliance on domestic borrowing have also added another layer of strain.
And to restore this optimism, to restore the economy back to the 5% growth and above, what needs to happen? We have a few insights on what the government needs to do. First is investing in sectors that build resilience, that protect the vulnerable, and that sustain the economy.
The Kenyan GDP grew by 4.7%, the previous data that we have for 2024. And by that, we extol that growth. But how is it in the region? Kenya was actually the last in terms of growth in our region. Rwanda grew by 8.9% in the same period. Tanzania grew by 5.5% in the same period. Uganda grew by 6.1% in the same period. So what I'm trying to say is that we have to be logical, everyone who has a position to make decisions for our country.
Despite attempts by the government to put in place austerity and revenue reforms, the continued abuse of supplementary budget and unsustainable debt accumulation highlight the fragility of the country's fiscal framework.
Budget was revised downward. The expenditure was revised downwards by 122 billion in the first supplementary. But at the close of the financial year, that is June of this year, close to the close of the year, the budget had increased again further and by around 67 billion or thereabout. The fiscal deficit increased.
The experts are now calling for continued strengthening of the intergovernmental fiscal transfers, accelerating pending bills clearance, and safeguarding the health sector investment and enhanced revenue mobilization. Jimmy Mbogo, Citizen TV, Nairobi.